Hooty hoo, all my stock market gamblers out there. This is Tall Mike, and today is Monday, August 31st. I just love Mondays. I really do. Stock market's back open. Weekends are great, don't get me wrong. Weekends are great, but stock market's not open. I love the stock market, and I love Mondays. Anyways, what I wanted to talk about today is why the billionaires are raising cash. In other words, they're selling the market. They're selling their stocks and they're getting dry powder. Why? Warren Buffett? Think about it. He's sitting on $100 billion in cash, waiting to put it to work. He wouldn't put it to work in this market. Why? Because the market's high. It's overowned. It's overbought. But who's buying right now? That's my question. Who's doing all the buying? If the billionaires are selling, who's doing the buying? Well, what's happened now is we got a company called Robinhood. They've opened up, I don't know, something like 20 million new accounts this year. These are traders, young people. They get a stimulus check, they put it in the market, and they're trading the market. They're buying these Tesla, they're buying Apple. But here's the thing. Okay, let's say they put $1,000 in. They're actually buying $2,000 or $3,000 worth of stock. They're buying on margin. Margin is at a record high. This is debt. Margin debt. It's levered debt. Now, when Warren Buffett buys, stock, he's not buying on margin. He's got the money. He's got the $100 billion. Now, when we get these, let's call them retail traders for lack of a better word. They come in and they don't have all the money, all the $100 billion that Warren has, but what they got is stimulus checks. And they're buying on margin. They're buying on debt. They're buying on leverage. Now, leverage is great going up, but it's terrible. Just terrible when it goes down. So anyways, now, I guess the question is, who do you believe is right? Do you think Warren Buffett is right? Do you think the billionaires are right for raising dry powder? Or do you think the retail trader's right, who's leveraging himself out more and more and more? More leverage, more leverage, more leverage. Well, personally, yeah, in the short term, very short term, maybe the retail trader's right. But in the long term, the retail trader is just going to get slapped. It's going to get hurt. This market's going to come down. Now, not yet. I'm not calling for it yet. I'll let you know. I'll let you know when I think it's going to get slapped. But it's not yet. This market's being held up by the printing of money, by stimulus, by the Fed getting in there and buying corporate debt. I mean, isn't that crazy? The Fed has to come in and they have to buy the debt of companies like Apple, Microsoft, Amazon. They buy their corporate debt. Why? Because they want to keep this market going. They want to keep it propped up. Anyways, they want to also make a profit on their money, and they know Apple can pay them back. Now, I just think it's wrong. So what I want to talk a little bit about is the decoupling of the stock market from the economy. These two used to be coupled together, okay? When one did well, the other would do well. When one did bad, the other would do bad. We have this decoupling that has never been as big as it is now. Never in the history of the stock market has it been so decoupled from the economy. Now, eventually, they're going to get coupled back together. They're going to come back together, right? But now, okay, so something's got to give, though. Okay, either the economy has to start doing really well really soon, or this market's going to give back. It's going to give back a lot. I'm telling you. Something's going to give. Now, a lot of people think the economy's going to get this V-shaped recovery. I'm not buying into that. I think the stock market's is the one that's going to come back down, but not yet. Now, when this whole thing, this whole absurd debt bubble, when it blows, are we talking about an inflationary environment or deflationary environment? Now think about it. Okay, the debt bubble's getting so large. They're going to print so much money. They're going to print hundreds of trillions of dollars. It's going to blow. It's going to reset. Now, all right, so when it happens, is it going to reset like Zimbabwe? Just keep printing more money, print $100 trillion an hour instead of a month? What are they going to do? What are they going to do? Are they going to inflate it to where money's absolutely worthless? Is that what's going to happen? Are we going to get this deflationary scenario where prices are just going to come down? The stock market's just going to come down. Real estate's going to come down. Prices are going to come down. It's going to be very deflationary. Well, I'm telling you, what the billionaires are betting on is deflation first, so that they can buy all these assets, so they can buy them for pennies on the dollar. And then they're going to get the inflation. So they're talking deflation first, then inflation. So what are we going to see? What do we look for? What I'm actually looking for is a blow-off top in the stock market. It keeps grinding up, It keeps grinding up. And, there's an old saying, stairs up, elevator down. This market, when it comes down, it's going to come down fast. But I think we're going to get a blow-off top first. I really do. Now, what's that going to look like? I'm not really sure. Maybe we're already in that blow-off top right now, because we are pretty much just going parabolic on the NASDAQ and the S&P. We're just going up every day, day up, every day. All right. A pullback. Not a crash, just a pullback would be very positive, because I think, like I say, I still think we're going to get a, kind of a blow off top. But, we might be in it right now. This is the best August. Do you realize this is the best August we've had in the last 30 years? This is the very, very best month of August for the stock market in 30 years. But yet the economy doesn't show that. Economy doesn't show anything. Go out there. Everything's closed. I live in the Bay Area. I can go up to San Francisco. 90% of the stores are closed. Over half of them aren't coming back. It's ugly. Restaurants shut down. Yeah, they have little outside dining areas, but they're not making money. They're losing money. Oh my goodness. Things are not looking good in the economy. So we'll see. Why did we have the best August in 30 years? It's so separated. I'm saying, a pullback here would be very positive, so we can get another, that blow-off top. Maybe that blow-off top will come right when the election happens. After the election, all bets are off. I don't think they're going to hold this up much longer. So anyways, my point for today is just to go out and get a little bit of dry powder. You're going to need some dry powder. Don't be sitting in margin debt. Don't be sitting 100% invested. That's crazy at this point in the game. This rally is getting long. It's getting very long. Get some dry powder ready. There's going to be some deals coming, and there's going to be some bargains coming. Now, what would I be raising cash with? I wouldn't be selling my silver here. Silver's cheap. I like gold too, but gold's not as cheap as silver. We can see that pull down a little bit, but silver's still incredibly cheap. I can't believe how cheap silver is. Anyways, I like gold and silver. I like the miners here still. I think the miners, the GDX, the GDXJ, still a very good bet. But other than those, man, start to raise some cash. Maybe the cryptos are still okay here, but regular stocks, I'd get some dry powder ready. I'd get into some cash. Anyways, that's all I got today. Get some dry powder ready. This is Tall Mike, and I'm a stock market gambler. Get out there, have a great day, and I'm really enjoying this Monday with the markets open. We're down, we're up on the NASDAQ, down on the Dow. NASDAQ is just going parabolic. You guys get out there, have a great day.